Well, finally, it looks like there could be, a glimmer of good news for the European steel industry. It looks like many of the European steel producers now are hiking prices for carbon steel, which could, of course, lead to a material improvement in spreads. Morgan Stanley has noted that companies like an Arcelor Mittal, take for example, is raising its European Union HRC or hot rolled coil spot prices to 600 euros per ton. This versus a spot price level of 540 euros per ton. Now, if this is accepted, it would actually take European spreads to a record level of $400 US dollars per ton versus an average of just at $244 per ton. Remember that European spreads have really been a worrisome point, especially for those steel companies that are present in Europe, and of course Tata Steel itself, which has its Tata Steel European operations. Now, furthermore, it's not just the price hikes, it's also the fact that we have seen this massive pullback in met coal prices, lower freight rates as well. That's further going to aid spreads. The inventory levels across Europe as well are low, and there are extended delivery timelines for certain materials. So all of this could perhaps help sustain prices for longer. And guess what? It's a cause of double celebration for these steel companies, because along with this improvement in the pricing scenario, we're also witnessing shipments increasing. So yes, in the third quarter of FY21, Morgan Stanley is assuming a dip of 15% on a sequential basis, but most of the European steel companies like an Arcelor Mittal or SSAB have indicated a probable pickup in demand in the December 2020 quarter on a sequential basis. And of course, couple that with potential improvement in spreads, and you really have a winner in your hands. Of course, now the key focus area around here is marrying this entire bid that we are seeing in Tata Steel Europe, in the European operations with Tata Steel Europe. Remember that during the conference call, Tata Steel had highlighted that the exit spreads for the European business are better than the quarter average, indicating that there is a tailwind for the new quarter, that's the October to December quarter. Now, of course, the important thing is that these prices should sustain, this high spreads should sort of sustain, because that will be beneficial, obviously, to Tata Steel's Europe operations, which has long been suffering. It's been facing losses, cash losses as well, which were being sort of funded by Tata Steel India. Recently, they converted all of that debt from Tata Steel India to equity. But we had Mr. Narendran saying that, look, at least for the first half of FY 2021, there has been absolutely no support from Tata Steel India for Tata Steel Europe. And hopefully now, as things are improving in terms of volumes, in terms of pricing, perhaps this need as well for cash will further decrease, and eventually it will also limit cash losses.